Ben, I have a question for you. So definitely something that, just like your average home buyer, somebody looking to buy should understand. So you're a loan officer. You work for a company called Molitor Financial. Molitor Financial is a loan broker. They're not a bank. When somebody is gonna take out a mortgage to buy a property, they have options for, obviously they can get a quote from any different type of lender out there, but they have options in terms of the type of lender they even deal with, right? A broker, a bank, other kinds. Explain what those differences are.
Sure. So, as a broker, the biggest difference between, say, me and a banker is the flexibility that I have, right? So, as a broker, our company, Molitor Financial Group, they are not sending the money the day that you are closing on your property, right? We are searching in our pool of wholesalers, credit unions, banks that we are signed up to work with, and we are choosing one of them to work with. They are then funding and servicing the loan, right? So as a broker, I think our company right now is signed up with 18 different institutions. So when somebody comes to me and say they're looking for a standard conventional loan, we're looking at 18 different places to see who's going to be the most aggressive on pricing, right? At the end of the
By
day,
pricing, you mean interest rate.
You got it. Yeah, sorry. Yeah, so who's going to be the most aggressive on interest rates? Because when it comes down to it, interest rate is king, and that is what we are hunting for, right? The other big difference for me as a broker, say, than somebody as a banker, it's really the flexibility, right? So when a complex buyer comes to me looking to get pre-approved, I don't just have, say, one institution to go to and ask, hey, how do you view this person's situation? I have 18. So if somebody's a little bit more unique, we have this plethora of lenders that we can go to and say, hey, how would you view this situation? And when somebody is a little bit more favorable, say for a self-employed buyer, right, we can use that lender versus another. If I was, say, a banker working for one institution, that's all I got.
Right.
It's just them. When they say no, that's it. That's the end of the road.
You're not even just shopping for a rate. You're almost negotiating on their behalf for them too, even advocating for them too, as you deal with the lenders. Yes, you have the rate, but now we're comparing rates. How can I work to get who can I get approved, where, and create the best situation for the buyer?
Yeah, absolutely. I think advocate is a good word there, especially when it comes to self-employed buyers, right? Because those type of buyers, we all know, they need advocates. They need people that are going to truly see what their income is to help them qualify, because sometimes it can be tough.
Yeah, because what, Ben? They write everything off?
Oh, weird, right? They want to pay less taxes as a small business.
I mean, I love it. That's
then their income's lower, so then they have a harder time proving their credit worthiness.
They sure do.
Yeah, they're doing a good job, right? They're doing a good job of not having to pay a lot of taxes. And that's a lot of, we see that a lot with self-employed people. It's like, how can I write off more so I'm paying less taxes? And that's great until you're ready to go borrow money. Because then what does a bank look at? Not your gross income, but your
net profit.
Yep.
Yes, they do. And that can be trouble.
Yeah. And that's the biggest thing we run into when it comes to a client comes to me and they tell me that they're self-employed. I'm like, well, let's talk to Ben and see where you're at.
So the other option, so instead of shopping for your own rate, looking at all these different places, you can retain the services of a loan broker who's basically going to shop for you, advocate for you, get you kind of hopefully the best possible deal out there.
So, a couple of points on the differences between, say, a broker and a large lending institution. I, like most people, have my checking and savings with a large lending institution. And, there's two things that I kind of see as big differences when you're getting a mortgage, right? Between, say, going with that institution versus a broker. One of the things is continuity of service, right? So when you make that first call to get pre-approved, I'm the guy you're talking to, right? At the end of this process, when you are closing on your loan, I'm still the guy you're talking to. So what I'm trying to say is that I am with you throughout that process. Any broker is going to be with you throughout that whole entire process. What I see a lot of times with these larger institutions is that there's a person that takes that upfront call, and then there's a plethora of people that get it from starting to finish, right? Sometimes that can be tough. Adam, but both of you I know have dealt with this before, right?
When you need last minute things, when things need to be done quickly, you're in a real estate transaction, you're on a deadline, you have a moving date, you have contingencies, all with strict dates and deadlines, all moving forward. When you need something quick, that can kind of obviously, pose an issue when, you have multiple people and channels, you have to go through versus just, one person who's handling it for you.
Being able to kind of on the fly, figure things out, critically think, and adapt to get that person into their home. The other thing that I think there's a bit of a misconception with is that if I do my mortgage through this large institution, I've got everything under one roof. It's great forever and ever. The problem with that is that when you're doing a conventional loan, the game is for that institution to package your mortgage up with hundreds of others and sell them to one of the two agencies.
They're not going to actually be servicing it once it's
they sure aren't. They may for a while.
Closing.
Yeah, and they may for a while, right? I usually tell people your average is 6 to 18 months. At some point within there, your servicer is going to change. So you are no longer paying institution A. It's now whatever servicer it is, right? Wells Fargo, Fifth Third, Mr. Cooper, I don't care. It's going to change.
Or you're just a piece of paper. You're one of a million. No, you're never going to get personal attention.
Exactly. And I think that's the misconception is that, oh, I have a relationship with this bank, so it means it's going to be smoother. I hate to tell you, and I'm not trying to be brash here, but like they don't care, right? You are one of thousands that are getting a mortgage. So unfortunately, your mortgage is going to get sold off to Fannie Mae and Freddie Mac, just like everybody else.
And then where does like a guaranteed rate fit in to that?
That's a good question. That's a good question. So guaranteed rate is a correspondent lender. Is it kind of the easiest way to look at that? What that means is that guaranteed rate underwrites, approves, and funds the loan. So they send the money the day you're closing. And for a while, you will pay guaranteed rate on your mortgage, right? Then they will sell that loan to whatever actual end lender provides that money. Right. So guaranteed rate, just like a broker, has this plethora of banks that they sell their loans to after the closing happens. Right. So it's almost just a timeline thing where a broker, the day you close, boom, it goes to whatever lender we actually were working with. With, say, guaranteed rate, they fund that loan, they keep it in-house for a bit, and then they package it up with a bunch of other loans and they sell it to whatever lender they were planning on selling that loan to from the beginning.
And one of the other differences too, though, Ben, is like, okay, yes, you're the broker and it's getting sold right away at closing, right? But if I have a question, I'm not calling somebody up at, 123 Lending, wherever it got sold to, right? And I can call you still, and you can still get answers for me and be my source of if I have a question for the most part, right?
Gosh, it's literally the number one thing I tell people when they close is that I don't care if your loan is with who we started with or it's been moved 2 times. Call me first, right? Because when you're in this industry for long enough, you develop relationships with all of these people and you know how to sort through issues that come up on people's loans years after they close so much easier and faster than they would trying to call into some service line. So yes, always, always.
Where does Rocket Mortgage fit into that?
All right. I'm trying to not be mean here. They're not great. Let's just say that. And then we can move from there. That's an online lender, really, right? There's no Rocket Mortgage retail branches. And, what I find about these online lenders, and that actually, Adam, you kind of bring us to a good point too, right? If when buyers are looking online and they're trying to find a lender to work with, boy, oh boy, the online lenders make themselves look good, right? When it comes to interest rates. And by and large, what you find out is there's generally some sort of a but, right? That's always what I call it. this is great, but you have to do this. And, for some of these places, you find out that the interest rates that they are offering, well, they may come with a cost, right? There may be some extra fees associated with that.
Extra few thousand up front at closing.
Yeah. And unfortunately, I think for consumers, advertising can be really confusing. Really confusing.
They spend a lot of money on advertising.
Oh boy, they do.
It's not a surprise that they cost more.
It isn't. That's a lot of overhead, and that's actually one of the reasons that I say that wholesalers end up actually being really great. These names that you've never heard of before, right? United Wholesale Mortgage, Home Point Financial, they are funding billions of dollars of loans every single month. And you know what? You've never heard of them because they're not paying for advertising. They're working directly with brokers. And because of it, we're getting those better interest rates.